Hi, welcome, folks. This is CNC Realty Group, LoftsNHomes.com, and we have next in our education series on mortgages, when you finance on a property. And to present that with us is Drew Stiegemeier, Vice President of Molitor Financial. Hi, Drew.
Hi, Kyle. Thanks for having me back to talk again.
Oh, it's always a pleasure.
So yeah, Kyle, as you know, kind of the slideshow here, we're going to talk a little about refinancing your property that you currently own. There's a lot of different opportunities to restructure the financing, and mainly what you need to remember is, what can we do to better serve your financial needs at the time that you're looking to do this? And there's a lot of different reasons to refinance, and we'll talk about it here in these slides. But, it needs to make sense. It needs to be something that's financially viable, and, it can end up saving a tremendous amount of money over the lifetime of a loan, depending on how we restructure it, when we go through it. So. As I said, they can be used to accomplish many different financial goals, whether that's to shorten the term of the loan. So when you purchase the home, you're in a 30-year mortgage. You can take it down to a 20 or a 15-year fixed rate mortgage. A lot of people took out adjustable rate products, which are very good. But you want to make sure that you do something with that before they hit their adjustment year. They can jump, a large chunk of percentage in the first years, and it's something you want to get out of and into a fixed rate product. So you had a good run for the first 5, 7, 10 years, whatever the fixed portion of the loan was. Maybe it's time to get into a fixed rate product, a 15-year, to close out your loan and have that stability that gets you through the end of the term. Sometimes people want to lower their monthly payment. If you're looking to rent out the property, you can restructure the finance back to a 30-year mortgage, take it as an investment property, and, be able to take down the payments so the property cash flow is better. Another real popular reason nowadays to refinance would be to remove that PMI, that mortgage insurance. Use equity in the home, and with the market conditions the way they are, chances are your property's value has increased. City of Chicago is hot right now, so now is a perfect time to consult, Kyle and myself to see what it looks like. If the value of your home improves enough to remove the PMI, or at least get it down to a level that, drops that PMI rate significantly, it definitely makes sense. And then one of the final reasons would be to take cash out in the equity of your home to pay down debt, or even to make home improvements. These are going to be a fixed rate product, so, not that a little different than a home equity line of credit or construction loan that's interest only. You're using the equity in the house to make the improvements. You can make them with the fixed rate, lower interest product, and, you'll always have that, that stability. And after the improvements are made, maybe we get more value in the home and it looks to kind of restructure it again and get it back into a, something maybe with a lower term, or, decrease the PMI, anything like that. But, it always makes sense to do that, because it's a lot lower interest rate than high interest debt. So, now what's nice about refinances, especially in Chicago, they may not require an appraisal. Fannie Mae and Freddie Mac are granting waivers on a more consistent basis. They used to be few and far between, but we're starting to see more of them, and that's something we can look at too. And if it doesn't require an appraisal, that's fantastic. And if it does, the loan costs are still significantly lower than a purchase transaction. So loan costs are roughly $2,000, maybe $2,500 all in. Title's significantly less. The bank charges an underwriting fee, and then the appraisal is roughly $500. So they're still substantially less than a purchase. So, and they can be rolled into the loan, which is nice. And these loans close in 30 days or less. If we can get an appraisal waiver, we're talking sometimes as short as 3 weeks. This is a simple transaction, and it's really something that, we excel in. So it's something that can be done soon. I know that the holidays are coming up, so, it's something we could even get done before then. When to consider a refinance again. If you have PMI on your current loan, reach out and call me. We can have a discussion. We can see what, the value of your home is. And I'm sure Kyle can help with the market analysis to see if that's, that's on there. Another time to look is if you've been in there for 3 or more years. At that point, you may have paid it down, and with the value increase in your home, you could either look to decrease the terms to keep your payment roughly the same, look to lower that MI rate again, anything, and it's just a high-level conversation. This does not require a ton of documents and everything else. Or if you've done any home improvements or renovations recently, again, this could improve the value of your home. You could lose that MI even sooner than the 3 years. If you've done anything to it that, thinks may have improved the value, it's something to have a conversation about. Again, this is just a simple conversation that we can have. Takes no time, and, it could end up saving you substantial amounts of money over the lifetime of a loan. Another time is, especially in a condo building, or if you're on on one of the densely packed city blocks here in town, if you notice that a large amount of your neighbors have sold their homes, your property value probably is increased. The way appraisals are done is they go on comparable sales. So if your neighbor with a similar, unit to yours has just sold, and, they sold for, $20,000 more than what you thought your property was worth, maybe it's time to reach out and see really what the market's doing, as far as the value of the property. If your interest rate is greater than 4%, reach out. I know that that's still, that's still something we can work below, especially if we take a shorter term now. If 15-year fixed on a owner-occupied rate and term refinance, you're still going to be in probably the low to mid threes. And if you're in an adjustable rate mortgage, especially if you're approaching that, that term year where it can adjust, you want to make sure that you talk about that. If you currently hold an investment property and you want it to cash flow a little differently, we can do that. Or if you're even looking to, purchase an investment property, we could talk about that as well. High interest debt, credit cards, that would be a term, that we could pull a little bit of cash out of the equity in the home to take that. Because if your high interest credit card debt, just for example, is at 10% and you're loaning the money out at 4.5% on a cash out refinance, you're still saving a tremendous amount of money. And then it's just rolled in, the credit card debt's paid off, positive impacts all around. And if you have student loan debt, they've now changed how they address that as far as, we can do this now as a rate and term refinance. So it gets rolled back into the loan, then this is now student loan debt that's paid off, and you can roll it right into the equity in your home. We're all out there with student loan debt, myself included. It's a very nice option to have, and it's something that, they just started, earlier this year on the way they address it. And again, if you're wanting to make improvements on your home, renovations, whatever it may be, use the equity in your home to pull cash out to make those improvements. And then again, 6 months later, you can look to refinance after the value's gone up. A whole bunch of different options are available for you. So it's a less expensive way than kind of drawing out a home equity line of credit or a construction loan for that. So, I know there was a lot of information in this one, but really kind of the overview kind of wrap up for this. If any of those scenarios sound like you, give me a call. This is just a quick conversation we can have. This is not that we need all the information in the world. It's something we can talk about, see if it makes sense, and then look to pursue it. Like I said, it's only going to benefit you. It restructures the financing to meet your financial needs, and, it's something that we're happy to help you with. So I think I'll turn it back over to Kyle. If I'm not mistaken, we've got a few questions that have come in, as we were going through this, which I kind of expected since there's so much information.
Yeah, great info, Drew. Thank you. Steve wants to know, what are the costs for refinancing compared to a first loan? Is it higher or lower?
Oh, they're substantially lower. Like I said in that slide, they're typically around $2,000 to $2,500. All in. That's title, everything else. With a purchase transaction, you're in the city, you're dealing with a transfer stamp. Title's typically $3,000. It's substantially less. It's a much quicker process. Simple. Simplified as much as we can make it, and kind of go from there. But closing costs are substantially less than if you were going to purchase a new home.
Fantastic. Rosling628 is asking, what is a quick refinance? She heard some folks talk about that.
Well, I mean, really all refinances should be quick. I mean, they should none last longer than 30 days. They're all pretty straightforward. We like to do our homework on the front end. And if by chance we catch an appraisal waiver, these could be done in 3 weeks, and that is no lie. It's, if it's something, that's why we always want to have the conversation to make sure it's something you're seriously wanting to pursue. And then if it is, you'll see the value, and it's something we move through really quick. Everything's kind of done electronically now. Closings are really nice because we have a mobile notary service. We'll send them out to your home. So you can close of an evening sitting at your kitchen table, something that was unheard of a few years ago. And it's really wildly popular, and it's a fee that's it's a service that's just included with working with Muller.
Fantastic. Next question comes from Raleigh. Raleigh is asking, my credit's not so good since I bought the home due to some medical issues. Does that affect refinance, or can you still refinance if you don't have necessarily the perfect credit?
Yeah, you absolutely can, and that's something we'll sit down and look at. If it doesn't make sense to refinance, if your current mortgage is going to be a better product than what you can get out of refinance, unless there's going to be extenuating circumstances, we're not going to advise you just to refinance your property. That's not how we operate as a company, not how I operate as a person. Unless it really is justifiable, and the options, are out there. If it makes sense, I absolutely, we'll definitely work for it. But if it doesn't, we're going to say, hey, you're kind of better off where you're at. And again, this is a simple conversation. It takes no time at all. My contact info is right there on the screen. So feel free to call me on my cell. I always have it on. I answer days, nights, and weekends. It's something we can talk about.
Fantastic. Last question comes from Neb. I want to refinance an investment property. Is there anything that's different?
The only thing that's different is the appraisal. You have to have what's called a rent roll or a Form 1007, but that's the only thing that's really different. The process works the same. We do a lot of work with investors who want to make their properties cash flow differently, or maybe take it out to a 15-year term to pay it off, so they're ready for down the road as a source of passive income on the property. So they're drawing on that without having a note on it. And again, as I've said, and it sounds like a broken record, I apologize, but again, that's a conversation we can have. Super simple, and we'll make sure that the pros definitely outweigh the cons, and talk about what best meets your needs. And especially as an investor, chances are you'll have multiple properties, and it's not uncommon to do multiple transactions at the same time. So.
Great. Last question comes from Lee 2085. Can you refinance a property less than a year after you obtained the mortgage?
Yeah, you absolutely can. We typically want to say you need to wait at least 6 months, but the market's kind of been doing an up and down. So, if you purchased, especially last year, December-ish, if you went under contract and your interest rate was locked in, it may make sense to take a look. With the appreciation in property and, the way the interest rates dipped, you may either save on MI, you may save on the interest rate, all kinds of stuff. And again, we'll make sure that it makes sense before we proceed. And, if it does, we'll spell it out, show you, hey, this is the savings, this is what this all looks like, and, go from there.
Well, great, Drew. That's all the time we have for today. This is CNC Realty Group, LoftsNHomes.com, with the education series on when you should refinance your property with Drew Stiegemeier, Vice President of Molitor Financial, presenting. So if you like this presentation, please like and subscribe to our YouTube channel at LoftsNHomes.com. Give us a thumbs up. Also, you could join us on social media on Facebook, Google+, Twitter, Instagram, LinkedIn, and everything else that's out there. So we appreciate you joining us today, and we look forward to you joining us in other future education sessions. Thank you very much.